With no clear end in sight to the war in Iran, oil prices are surging. The cost of Brent crude is now at $108 US, following President Donald Trump's address to the nation last night.
When this conflict is over, the Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back up. They haven't come down very much, frankly.
Today, British Foreign Secretary Yvette Cooper hosted diplomats from more than 40 countries, not including the U.S., to discuss how to reopen the Strait of Hormuz and get oil moving again. Rory Johnston is a researcher and expert in global commodities markets and founder of Commodity Context. Thank you very much for joining us. Now, gasoline, jet fuel, and diesel prices have skyrocketed. You have stock markets that have tumbled. You have a recession odds now having gone up. How bad is it?
This is already the worst energy shock in the history of the oil market. The amount of oil that we've lost to the Strait of Hormuz is about 20 million barrels a day, which is about 20% of global supplies. We've just never seen anything even close to that. Even accounting for all of the offsets and rerouting that the market has kind of miraculously managed on such short notice, we still are short about 13 million barrels a day. And given, various attempts to offset that with IEA strategic petroleum reserve releases or other loosening of sanctions on Russian or, yes, even Iranian crude, that's only likely to put a dent in that deficit, and it's going to keep driving down inventories and prices higher. We're seeing crude oil prices rise to the highest levels since at least 2022, and refined products across the border skyrocketing, with the locus or the kind of nexus center point of that pressure being what we call the middle distillate products, which is largely diesel and jet fuel. And that's where we're seeing the biggest pain right now.
So what did you make of Trump saying that, when the conflict ends, the Strait will open up naturally and prices will come down?
It's optimistic, let's just say that. I think what we have seen, and I think, the other thing that Trump said in that speech was that the United States doesn't get much oil from the Middle East anymore. And it still does get some oil, but he's right. The president is right that the United States and North America broadly does not get as much oil and gas from the Middle East as it used to, following both the shale revolution and the kind of fabulous growth of Western Canadian oil production as well. But even with that, occurring, these prices are just going to continue driving higher.
And what do you think of his strategy of saying now that because there isn't the same kind of dependence in the U.S. on the Strait of Hormuz, that other countries who do depend on it need to fend for themselves? What will that do to the price of oil?
Yeah, I think, he really solidified something he posted on Truth Social earlier this week, which I've just kind of come to define as the go get your own oil post. And I think what you've seen is that this is in very many ways the death of the Carter Doctrine, a policy that has centered U.S. foreign policy and security strategy around the Middle East for most of the last half century, following the energy crises of the 1970s. And again, this is in many ways the largest crisis since then. So what we're going to see here is that Donald Trump has clearly decided that because North America doesn't get as much oil from the Middle East as it used to, that this is really a problem. He started the war, closed the Strait of Hormuz, or prompted Iran to close the Strait of Hormuz, and now he's kind of saying, I can leave, and I'll leave the tougher job of opening up the Strait to Europe and to Asia, which is just going to be very challenging because at the interim, what that effectively does is cedes sovereign control of the Strait of Hormuz to Iran, which has just spent the past month bombarding its neighbors that use the Strait with missiles and drones. So it's going to be politically untenable and geopolitically extraordinarily risky for the oil market to be in a position where this might not be the last time we see the Strait of Hormuz shut, even if we do get the Strait reopened.
And having considered all that, and you talked at the beginning about just how bad it is right now, what are the outlook for the long-term economy with oil prices the way they are now, and if they're not going to come down anytime soon?
I think if the Strait remains closed, this essentially guarantees a very, very deep global recession, even if the Strait was open at the end of April. So I think what we heard from the president was that this is planned that, it's going to last 2 to 3 more weeks. Really, we've heard 1 to 2 more weeks every week of the war. So let's just say best case scenario, this is going to be done by the end of April, which means that the Strait of Hormuz is not going to reopen in the best case until early May. That means 2 full months of closure. That is already going to guarantee upwards of 1 billion barrels of oil not produced in the global market, given the forced shut-ins that have occurred across Iraq, Kuwait, Saudi Arabia, and the United Arab Emirates. That is a tremendous volume of oil and will keep the oil market tighter for longer. Going into this crisis, we were actually in an oversupplied market with stocks rising and oil prices falling. There's effectively zero chance that we can go back to that status quo this year. At the very, very best case, it essentially rewinds the clock and puts us back into a position we were, let's say, early last year. And I just think that that is an optimistic read of the situation. And going forward, it seems that we're just going to have a much riskier supply situation, particularly in the Middle East, which is going to put the focus on America's supply, growth out of non-OPEC countries like Canada, the United States, Guyana, Brazil, and Argentina, which have been the bulk of non-OPEC supply over this period.
Thank you very much for your time and your insights today. That's Rory Johnston, founder of Commodity Context.